Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is December the 15th, 2013, and here is this week's weekend review video brought to you by wallstreettrading.com. Wanted to bring you guys the weekend review video so we can see what's going on, how everything's shaping up going into next week as we are winding down to the end of the year here, and it's going to start slowing down the closer as we get to the Christmas and the New Year. So we're going to be taking a look at a couple of indice charts. We're going to be taking a look at some sectors. We're going to be taking a look at individual names. So make sure you tune into the full video. If you do like the video and the analysis that we bring to you today, make sure you like the video, share the video, and at the same time, make sure you go check out our website, wallstreettrading.com. If you're interested in taking our education course, joining our proprietary trading firm so you can trade firm's capital, or if you're interested in maybe doing some guest blogging or something like that, we're working on a whole bunch of different things. Contact me at ccooper at wallstreettrading.com, or you can contact us via the website in the upper right hand side of the page. So let's go ahead and get into the video here. I want to start off by taking a look at these monthly charts and some of the indices, and then looking at the weeklies and the dailies, and then going from there. So starting off with the S&P 500, the SPY, which is the S&P 500 ETF here. Taking a look at this monthly chart, you can see that we've been in this little range for about 15 years, 1997 or so I'm starting at, all the way to 2012, 2013. We broke out of this range at the start of this year, and we've been rallying since. Now, I took the moving averages off the chart so you guys can see the general pattern here, right? 1997 down there, you can see sideways, 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 sideways throughout this whole time here, sideways, big range. Even in the 2008 sell-off, we sold off there during the financial crisis, but we found some support down there at the 2002 lows. So we bounced, hit those lows in March of 2009, of course, and we've been rallying ever since. So what I did, I took this little low, I took this little move up here. I'm using that as an A leg up, little pull back for the B leg, and this is the C leg that we've been experiencing right now. As from this big macro pattern is what I'm looking at. All right, again, this is where I'm looking at it from. You guys may have it from different areas, or if you're using Fibonacci extensions, but in general, again, I'm using this as a big move up for the A leg, a little pullback for the B, and the leg that we've been experiencing from, say, October of 2011. I'm using that from where we're at right now as a C leg. And if you use those different inflection points as an ABC move, you can see when you put the extensions on here, this is a full 100% move that we hit last month, and we've been chopping it around this month. So I think that's why we're experiencing some of this volatility up here at these prices a little bit. A little bit of some resistance around, let's see, around these highs in the S&P 500 spiders around 180, 162, call it 180, 150. So there's been some action going on right here, and I just think it's because some people are taking profits up here for those macro or those long-term traders that have been holding those long positions since the low of 2011, or for those retail traders, or for those institutions that are looking to take some profit off the table from this big move up, especially going into the new year, profit taking, or as we're closing out the end of the year here, people looking to rotate some money around, maybe take some money out of financials and technology and move them into some commodity stocks or some basic material stocks. We're seeing some of that action going on. You see, you have some profit taking coming out of healthcare and that rotating around. Even though financials look like they could continue moving up into next year, we'll take a look at some of those charts here. So I just want to show you guys, again, we have a big range. All right, we have a range we've been trading in. Okay, we have the breakout of the range. So what usually comes after that? Well, you usually get the back test and the follow through. That's scenario one. All right, or you get the pull back with the lower pivot high, and then a move up with the breakout for scenario two for the continuation ABC move. Okay, or you get again an official back test, chop around, and a breakdown back into the range, and a whole bunch of people stuck, possible bull trap. So we have to see what's going to take place. Obviously, if you're looking for the market to sell right off, I do not think that's going to happen unless some news comes out. You can see this is what I'm looking at as a breakout area right here. All right, so the level that we're at right now, we're going to see if this is in fact going to be the start of a pullback for that lower pivot high again, okay, or for that official back test and then move higher, or for the pullback that just breaks through. Could that be an area we're at right now? We'll see. We have the breakout right here. All right, now we're going to see if we're going to get the pullback. We are at the 100% level from the measured move of this wave last, that little wave up we had right here. All right, again, this is your little ABC measured move. So taking a look at the weekly chart now, actually, let me put the moving averages back here on the monthly. All right, one thing to take note of is that we have been cruising along this rising 8 EMA for the whole year. We violated it a couple times, but then we bounced right off the 20 EMA SMA that's been right below it. Sorry, that's been the 5. Sorry about that. That was actually the 5 EMA SMA we've been trailing along the whole time here for the year. And we've been trailing along the 8. Every time we broke below the 5, they bought it right up at the 8. So you can definitely see this year has been a really, has had a lot of momentum this year. And now we're going to see if there's any profit taking going on going into the end of the year. Taking a look at the weekly chart of the SPY, you can see we had this nice little upward channel again from the 2011. Some pivot points I took, this little pivot low down here, this little pivot high, this pivot low. That allows me to draw this nice little clean channel. And price has been respecting the top of the channel. Every time it gets up there, it has gotten rejected. Same thing here, same thing here, same thing there, until we broke out above that top of the channel back here in November, the start of November. We broke out, and now we've rallied up a little bit from the breakout, and again now we're pulling back to the top of the channel. So we're going to see if it holds right there. If it holds right there, we'll be looking for that move up. If it doesn't, we'll be looking for a move back in. One thing to take note of is that we are, let me hide the drawings here. We did have a sell bar last week. All right, we have had two consecutive lower closes. Some volume starting to creep in there a little bit of volume, and we closed right on top of that fast moving average, 8 EMA SMA on the weekly chart here. So if we do break last week's lows, we'll be looking for a pullback. The real lever to watch if we do pull back would be down here. Again, prior resistance now becomes support down here around the 172 from this little breakout. That would be an official pullback right there. And then if we put that lower pivot high in for a pullback, that would probably most likely be around the 174 area from that rising 28 moving average, which you've seen has held 1, 2, 3 times before. Could hold a fourth time if we pull back down there. We'll see. Again, we have to wait till we get there. And right now, we closed below last week's lows. We closed right at the moving average. So again, we could see a little bit more pullback action. I'll be looking for this 176 level to act as short-term support if we pull down there, and then 174. Short-term resistance is up here around the 181.70 area, or call it 182, as they're selling it right in front of that figure, 182. Now, taking a look at the daily chart, which we cover on a day-to-day basis during our after the bell market summary videos, you can see here last week we had 1, 2, 3, 4 consecutive lower closes. Monday was the only higher close, and then we closed down for the next couple of days here. And then taking a look at the top of the chart, let me just fix this thing up real quick here. You can see the volumes picked up a little bit as well from that little volume trend line we've drawn in the pattern. And then taking a look at the daily chart, we went right to our target, the 177.55 level, and we've been trading on top of that level for the past couple of days here now. Again, this is a down move right here, sideways action. Could be a little bear flag that could be forming right here for a move down. Again, if we do break below 177.55 on the SPY, we have this rising 50-day exponential and simple moving average that could come into play around 176.72, or call it 176.50 or so here. And then we have that little pivot from this little pivot low right here that caused a move up. That will be in play around 176. So 176 will be the next decent level to try to pick up some longs on some of these names that are pulling back and that are coming into some decent support or some decent key moving averages on the daily, or better yet on some of the weekly time frames as well. So S&P, full overview on the week, monthly, weekly, daily chart, everything still looks pretty decent. Taking a look at the NASDAQ 100 via the triple Q ETF, we're going to start by taking a look at the monthly chart here. Again, ever since we broke past these Fibonacci levels that we've been tracking from the start of the tech bubble sell-off, from the high of 2000 to the low that I made in 2002, you can see we broke above the 50% retracement on the triple Q, which was around 70.52. Again, remember, it acted as resistance back here in September of 2012. We got rejected, then we rallied right back up. Then we broke out, back test held, then we rallied back up. So that 70 area was a key momentum level on the NASDAQ. We mentioned that before in some of our previous videos. And now you see that we're here, we touched the top of the channel and a little bit of pull, a little bit of selling pressure right here, but nothing too crazy. I do think that the NASDAQ sector is still going to be a good area where people are going to be putting money to work, all right, to look for some alpha. Some of these technology stocks that have been performing pretty well, and they probably look for that to continue going into the new year. So the next major level on the Nasdaq 100 is going to be up here around 90 half. You can see we're at 84, 85 right now, so we still have about another $5.20 potential to the top side. Taking a look at the weekly chart, all right, we broke above the top of this channel line, which that we took from this little pivot low down here, this pivot high, these pivot lows down here, and we broke out back here in October, and we've been rallying since. Traded sideways into the rising moving average, got a nice little pop up, and then now we have a little pullback bar. Again, this is the last week we had a lower close than the prior one, so we'll see if that continues. We are on top of these key short-term moving averages, so everything's still looking pretty nice here, especially on the Nasdaq, which has been showing some relative strength, which has been giving the market the extra momentum these past couple weeks here. All right, looking at the daily chart, they looks like they fixed that candlestick I was telling you guys about. It's supposed to be a big down bar like it is right now, but they had it as a kind of like a little gravy doji stone or gravestone doji, which again, of course, now they fixed it. Again, on the Nasdaq, a lot of the action that looked kind of mixed was the fact that we were getting all these little dojis in this area, a little bit of indecision, and then we got the big sell bar on Wednesday, pulled back for the next following days. We tried to rally intraday, but they sold it right back off, and then we closed right on top of that 20-day moving average, EMA, SMA on the daily, around 84.80 or so. Again, if we pull back, the next level you want to watch is going to be down here around 84. All right, you have your pivot right there, resistance. We broke out, support, so it should act as support. Prior resistance becomes support. Watch that 84 level, and we'll go from there. Now, I wanted to touch base on the IWM because it has been showing relative weakness the past couple of days, if not the past week or so, and that's where a lot of the selling momentum has come into the market as far as the indices goes. And as far as the indices go, and you can see that it's still holding the moving averages, the short-term moving averages on the monthly. Everything's still in good shape. Most likely probably a pullback. If we expect this trend to continue, we want to see it, I would say, hold this 5 EMA, at least for the momentum. If we break the 5 EMA, we still have the 8 EMA around 105, which of course is where the breakout happened back here in October. You can see 105 was acting as resistance these 2 months right here. We broke out, and then we've been above that 105 level since. So 105 is definitely be a level to watch. Again, we're at 110 right now, so that's too far. Let's go and take a look at that weekly chart. On the weekly chart, you could draw a key trend line in from this little low that it made back here in April on the 22nd, or that week of the 22nd. Draw a little key trend line here, and you can see the nice little momentum trend line that you should be gauging on the weekly chart if you're, especially if you're taking swing trades. And you can draw this nice little upward channel by connecting those little lows and then drawing a little trend line in right here. So a nice steep, I would say, a nice steep tight channel on the Russell 2000. As long as we stay in this channel, you want to be looking to buy dips in some of these strong names that trade in the Russell, or some of these strong sectors that trade in the Russell, or better yet, if you're trading the Russell by itself, you can buy that T and A on those little dips as long as you're doing it around key levels. And so again, on the weekly chart, the original breakout this year happened around 95. We broke out, we pulled back test held, we traded on the top of the range, broke out again, rallied up, back test held, little range, broke out again. So you can see we just been stair stepping our way higher, and now momentum's trying to come out. Momentum's trying to come out the market here in the IWM, slowing down a bit. The most recent breakout level we had was here around 111 or so, and we broke above that, trapped some longs, and now we're holding below it. Again, keep an eye on this short-term level to keep an eye on, especially on the weekly here is 108. Taking a look at the daily chart. All right, taking a look at the daily chart, we had this this big upward channel that you can see in the background. Let me remove some of these drawings here. All right, you can see the big upward blue channel. Again, we're using that 50% trend line as a gauge of right here, the 50% trend line of that big channel. Again, above the 50, bullish, below the 50, bearish, above the 50, bullish, below the 50, bearish. That has been working for us. Anytime you have a range, you can draw that 50% trend line. It will help you gauge whether you should be bullish or bearish, because of course, if you get above the 50, your target's most likely the top of the range. You get below the 50, the most likely target, of course, is towards the bottom of the range here. That's how you trade ranges. You guys should know that, of course, I'm assuming. But taking a look, which is my favorite word to say now, at the on the on the daily chart here, we're at the 50-day moving average. If we hold that 50 like we did back here, we could get a nice little pop back up. So keep an eye on the IWM for some possible buys early next week. We're at the 50-day moving average. We're also at some support from a couple weeks ago. Could this be a new range developing right here between 114 and 109 half or so? We'll see. If we do rally up, make sure you know that resistance is going to be right here around 111.40 from the moving averages, and from prior support broke down, so now resistance over here. That's how the IWM is looking. Real quick look at the Dow, DIA, the Dow Jones ETF. Take a look at the monthly. Monthly still a nice little uptrend here. Nothing much to talk about there. Nice uptrend. Just broke out, matter of fact, here back in November above this 155 half area. I'm keeping an eye on that level if we do pull back on the weekly chart. Again, let's see what level this sinks. On the weekly chart, it's showing 156. Prior resistance, now support. So keep an eye on the 156 level before you keep an eye on that 155 half. And then 155 half is where you have, I would say, this rising 20-day moving average on the weekly. So that's still looking pretty decent. And then taking a look at the daily chart, all right, we broke back below that key trend line from this little channel, from these little higher pivots that we had right here, these high pivots that have caused us that we experienced some selling at the top of that channel. We broke out here, pulled back, back test held, rallied up, pulled right back down. We broke below it. If we can get back above 158, that would be good. We'd be looking for a move back up to 160. And then if we don't get back above 150 and we trade, say, below 158 and above 157 in this little range right here, we can experience a little pullback possibly this week or the week following. We'll see. Again, we do have some support from the moving average right here, and we do have some support from this level 156.18, and it is still chopping around the top of that channel. So I'm not really seeing anything too crazy right now in the Dow Jones, and obviously I don't really trade that many stocks in the Dow as well. But we do like to track it and get a general idea of the the key indices and markets here. Let's take a look at that volatility index. The VIX did bounce up a little bit this week. I think the VIX is possibly due for a move, maybe for a flash into the 20s. We'll see. Right now, you see it's been trading this little range here. This year, this year and most of half of last year, you can see the VIX has just been pretty quiet. We've been trading in a range between, say, 19 and 12, and every time we popped up 19 real quick, they sold us back down. And again, we really haven't been able to catch a high bid and hold a high bid in the VIX 20. It's kind of tell you that this volatility has not been in the market really this year. But I do see a couple things shaping up here. One thing to take note of on the weekly chart is this nice little downward channel that I drew in, and of course this range. Anytime we get above 16, that's usually when we catch a little bit of momentum here. But you can see we have this nice little downward channel from this little up move, down move, up move, down move, up move. One thing to take note of is that we're not coming back down to the bottom of the channel. We're actually starting to hold a bid right here at 12. And again, that momentum level, that the level that usually brings a little short-term momentum when the VIX pops up, is right at 16. So if we start trading above 16 and holding a bid above 16, I'll possibly look for a spike up like this, like we'd have before. And then if we hold above 16 and we break over 20, it could be a different story. But again, that's nowhere near right here unless we really get a breakout. Because the short-term action on the VIX chart, we do have some momentum starting to come in. It looks like you can see the trend is starting to change a little bit here. This little pivot pullback got bought right up, and we made new higher highs. So in the short term, The VIX is in an uptrend. Is in a uptrend. You have a little up move, little pullback, little up move, made a higher high. So you have a low, a high, a higher low, a higher high. Short-term uptrend. Again, if we break over last week's high, all right, over the 1610 level, we could get a nice little move back up towards, I would say, 17, maybe 17 half, 18. We'll see from there. So that's how the VIX is looking. The dollar, which closed down, which closed, maybe it looks like it closed possibly. Closed a little bit up for the week here. Let's take a look at our bigger time frames here. The dollar index has been trading in a range between say 83 and this little 79 area. We're coming right back down here towards the bottom of the range. And as you guys know, the dollar has been trading weak for the past couple of weeks now, ever since it broke back below its 81.50 level. We've been chopping around here. And I think this has been causing a little bit of the shake-up in the markets, the strength of the euro, the weakness in the dollar, and some of the action in the commodity space. So, taking a look at the weekly chart, U.S. dollar broke its little upward channel. We broke down right here back in September. Let me zoom in a little bit more here. Broke down in September from the uptrend line, rallied back up. The back test held for the lower pivot high. All right, and now we pulled back. We're holding the 80 level. If we break below the 80, look for a move to 79. I believe we do have some key data coming out next week here. All right, we have a whole bunch of news on Monday. We have FOMC meeting that begins on Tuesday. Press conference on Wednesday. A lot of people, I'm pretty sure, are going to be looking for some taper, some hints towards if they're going to be tapering, or the language that they're going to be using during that press conference on the economy. So keep an eye out for that. Jobless claims on Thursday. Housing starts on Wednesday. Quadruple witching on Friday. GDP coming out Friday. So looks like it's going to be an exciting week. Make sure you're on top of your game. And we're here to help you with that by giving you this nice analysis that we're providing here from the video. On the dollar, I'm going to take this little trend line right here and take note of this little downward parallel channel we have right there. We'll be gauging that going into next week. So the dollar, if it gets back above this 80 half level and holds, it can maybe go up towards 81. If we break above 81, look for those 81 20s, 81 40s. We'll gauge this on a day-to-day basis going into next week, of course. So that's how the dollar's looking. Let's see real quick the weekly chart. Yeah, weekly chart bounce right there. So on the euro, which again we've been calling the euro out for ever since back here in September via our channel analysis and a whole bunch of different things that we've been gauging. All right, and now the euro has broken out ever since it broke over this 136 area. That momentum came in. Had some resistance right around this little potential double top we're making right now around this 138. If we break above 138, we're going to be looking for those highs back up towards those 52-week highs. And right now, again, we had our breakout right here. So whenever you break past the key trend line, you're either looking for that official back test or for that higher pivot low that could be put in, all right, or for that little high base range flag that could, give us a nice another momentum move up. We'll see what happens next week. But definitely looking for some shakeup in the currencies as we have that FOMC and everything coming out. So, all right, so let's go and take a look at the commodity space now, starting off with crude oil. Again, crude oil on the monthly chart broke out of a nice little big symmetrical triangle. All right, we broke out. However, we pulled back in. We should have held at least this 97.50 level I was looking for, right? Prior resistance should now act as support. We did not hold. We actually broke down a little bit more, held the 92 level, which of course is then just a back test of the upward trend line resistance, and so far we're holding. So if we could hold 92.50, maybe going into the start of 2014, we'll be looking for this crude oil to bounce and get a nice little move back up towards back above 100. We'll see. We're going to be gauging that pretty closely. Taking a look at the weekly chart. Again, big breakout bar last week, big extension candle last week, little pull back bar this week. If we get back over 98 and hold, we'll be looking for a move back over 100. Really want to see a bit above 98, and just like I was showing you guys on the monthly chart, this is that level of resistance right there, 98. So 98 is a key inflection point, guys. Above 98, bullish. Below 98, bearish. I would say the neutral. Then below 91, 66 and holding, I would say bearish. All right, short-term action on the daily chart. Again, 98, the top of our little band of resistance from back here earlier in the year. And we broke out right here. We pulled right back. That's what I was talking about on the just not too long ago here, just a second ago. We have to get back above that 98 level. And if we get above 98, then get above last week's highs, 98, 20, 35 or so, we'll be looking for a move back up towards 100. Looking at the gold futures, again, last week we had expiration on the ES contract, so now you're going to be trading that. I believe it's a March contract. We had a December contract for the futures expired last week on the ES, and now we're going to be trading the, I think it's the March contract. But anyway, gold has been pretty interesting. All right, we've been pretty accurate on our gold analysis as well. But gold 1200, the key level to watch. All right, going in to the start of the year, we can hold above this 1200 area. I do think we'll be able to get it bounced back up towards 1400, which looks to be the top of the range. 1400, 1200. Is this going to be a double bottom down here? We'll see. But 1200 on the monthly chart, you can see is the key level to watch that those long-term players are watching. On the weekly chart, again, we're chopping around right here in front of 1200. We bounced off of 1200 back here in July. Are we going to go down there and give an official test of this little bottom right here before we try to call it a double bottom and move back up, or are we going to bounce from right here in front of 1200, or are we going to break below this 1180 area? It's only going to be a certain amount of time. It's going to be we don't have that much time to tell here. FOMC this week, we could get a nice little bounce in gold. Only a couple of days, we're going to see what this thing wants to do. It should get a nice little flash up or possibly a pullback, depending on what language and what they say in the FOMC meeting. But 1220, short-term support, short-term resistance around 1260, above 1260 again, look for the move up. Below 1220, look for 1200. Below 1200, look for 1180. That's how the gold space is looking. Taking a look at the GDX, the gold miners, they actually held up pretty well last week. All right, we had a big little move up earlier in the week, gap up on Tuesday, pull back on Wednesday, pull back again on Thursday. They got bought up, and then Friday gap up that pulled back. So you can tell there's some money starting to play around in this space. Again, you do not want to be the first person to the party, because there's another leg down. You're going to experience some losses or some selling pressure in your position. So if you're still waiting for some more conviction, fine. If you initiated a position last week on Monday, some of those gold stocks are still holding their weekly low, so that's pretty good. If they break below the weekly low, you may want to think about getting out, as they could go lower. But again, we're seeing some action come back into the gold miners. If you take a look at the monthly chart, we mentioned the fact that they're at this support level from this 21 area, from the 2008 lows or monthly support down there. If we go hold above 21, you want to look for a little short-term bounce up. If we hold below 21, you want to look for a continuation move back down towards the 18, 17, possibly 15 area if this thing starts getting some more selling pressure. Going into the start of the year, looking at the weekly chart, a little doji kind of looking candlestick here. Not even doji, but like a little spinning top candle. Again, made a higher high from the week, but we didn't close at the highs. We closed near the lower part of the range. However, we did still get a higher close for the week. All right, so showing us that there are some buyers trying to come into this market and nibble some of this GDX off the lows. All right, taking a look at silver real quick. Nothing too much to talk about here. Still watching this little channel that I have on my silver chart. Again, if we break above the upper black trend line right there, we're going to be looking for a move up, especially if we break above 21. If we start breaking and holding below 19 or 1840, I will look for another momentum move down in silver. But right now, we're just trading sideways between 19 and 20 half or so. Not really seeing anything too crazy in silver. I would like to know that silver, I think, is starting to trade a little bit stronger than gold. I mean, they're both trading kind of crappy, but silver looks like it's trying to hold some support down here in this area. You can see on the weekly chart, on the monthly chart of silver, prior resistance. All right, now support. So we're trying to bounce in this little support area. Again, if we can't hold above this 21 area, look for a move back down. Weekly chart, again, broke out above the previous 2 weeks candlestick highs, but we were not able to hold those gains. We'll see what happens going into next week. Copper traded pretty strong this week. It was pretty interesting. Monthly chart looks like it's holding some support down here around this $3.20 level. Nice little range going on there. You got some support down here around 310, support right here at 320, resistance up here around 340. Above 340, we can see a nice move up in copper. We're going to be on the lookout for that. A weekly chart, again, 320 support, prior resistance broke out, so now support, a little shakeout action, but we're back above 320. If copper decides to go up, next target will be up here towards 340. And when copper does break out, that'll be something that a lot of people on TV will be talking about. Oh, strength in copper. There's a lot of growth going on, global growth and stuff like that. So we're gonna be looking for that lingo in the coming weeks, if not months, going into 2014. If this chart breaks out, that does happen. We're gonna be looking at some of those growth commodity names or growth um, some of those growth material stocks, FCX, SCCO, and stuff from there. Um, what else? Looked at the indices, looked at the commodities, looked at the currency action. Uh, Take a look at the bonds. All right, bonds were weak last week. They got to bounce a little bit on Friday, but looking at the monthly chart, bonds have been an area that if you've been involved in them, if you had them in your portfolio, most likely lose money. A lot of bond selling going on. A lot of the taper talk has caused some of the selling in the bonds. A lot of people rotating money out of bonds into equities, since equities have been doing pretty well. All right, and we have to watch this 102 level on the TLT, the 30-year. If TLT breaks below 102, we could see a move back down. I would say towards 97.50. That would definitely cause them. Would definitely probably be a nice little pop in the markets if that happens, as people will be again shifting money out of bonds, possibly going into equities or maybe going into cash. We'll see. But the range on TLT is 102. The range on the TLT is this 102 and 107 half area. Keep it on those levels there. Weekly chart, trying to hold some short-term support again around this 102, 102.25 area. And then the daily chart, we highlighted how you had this nice little downward trend line that you could draw in right here, and use this as a gauge for these little pivot highs that were being put in, that have been put in here. All right. Let's take a look at this. Again, here's your little channel, at least your little downward trend line resistance. If we could break above this trend line, we may get a bounce up towards 104, then maybe move back over 104. However, if we stay below this key trend line, all right, we trade sideways, and then some news comes out and they start selling bonds, we're going to be looking for a breakdown below this 102 level. And this is something to watch right now. Again, this sector, not even the sector, sorry, this ETF and bonds should get a little shakeup next week as, again, the FOMC action. So that's how that's looking. That's how the whole macro, commodities, currencies, indices, VIX, how everything's looking there. And let's take a look at some individual names now. Starting off with the key names, the big hitters. Apple down $6.11 on Friday. Then we mentioned the fact that this is a nice little range. You want to be looking for Apple. You would have wanted to look for Apple to pull back, which it's doing right now. Look for a pullback to the rising 20-day moving average, or the 540 level, which comes from this prior resistance right here, should act as support in this area. We break below that, look for 526.27 area. All right, and then the monthly chart still looks pretty decent. Weekly chart in Apple still looks pretty decent. I'm not going to go into the monthly and weeklies on too many of the daily charts here. I'm sorry, I'm not going to go into the monthly and the weekly of these equities that I go through unless it's very important that I show you that, just to make the video a little bit shorter. But Apple looks good on the short term and the daily. Of course, you have your Amazon that you could take a look at. Amazon held that 380 area. You can see it's just trading in a range between 380 and 390. Look for Amazon possibly to get a move up next week. If it does, we could possibly see 399. As you have this rising 20-day moving average that could act as support. Then we have this nice little range. This could be giving you a nice little momentum trade, possibly early next week or middle next week if we get a breakout or some buying pressure comes into the market. I would keep an eye on some Amazon, maybe some call options, or maybe sell some puts against that 380 level. Depending how it sets up, we'll see. But Amazon looks pretty interesting in that space. Google, another big name that, of course, you want to gauge to get a good look on the tech sector or tech, internet, or just these big momentum technology stocks. Google, nice little upward trend line on the daily chart here. See a lot of support from this trend line. Then you also have some support from the moving averages. Nice little upward channel. We'll see how that carries out. If we hold that upward channel into next week, if we do get a little selling pressure early next week, back down towards this 1042 area, so that would be a good area to buy because you have a trend line from this little pivot low, from this higher pivot low, and this is a nice little momentum stock that is holding its most recent earnings gap up. Unlike some other names which have chopped around or traded lower, this one actually traded higher and has been trading higher from that report. The most recent breakout is 1040 from this little ascending triangle right here. So that 1040 level will be another good area if the market was to pull back or Google was to pull back to see if some buyers try to come in there and protect that level on Google in the short term. I want to take a look at IBM since the stock has been trading pretty weak compared to the other names. It looks like it closed down. And IBM looks like there's no love for the stock. I would be watching the stock for a short next week, Monday. All right, if it breaks below this 172.50. Now, if we break below 172.50 and we reverse back above it and we close like a little hammer, and this was like a little shakeout, well, then we'd possibly be looking for IBM to now make a little correction as it possibly shook in some last minute sellers down here, and now it's going to try to reverse up. So these are different scenarios to look out for. These are different scenarios that I've seen play out when you have a stock that looks like it's about to break down. It breaks down, triggers a short intraday, and then if you don't cover that short intraday, you usually get, it could usually come back for a reversal and close on its highs, and that'll be the start of a little short-term bottom. Again, we'll see. In general, IBM has been trading weak. Looking at the monthly chart, it's sitting right on top of that 50-day moving average, also right on top of the support from right here in this little area around the 170. So even though it looks like it can go down, you still have to be a little bit cautious trying to go short this stock around here. It has some support from back here in 2011. This 170 area was acting real relevant before it made that last push higher. Weekly chart. All right, so now the weekly chart though shows you that it could get some possible extra short-term momentum selling. Because you have this pivot low that's about to be taken out from this big sell bar, and definitely wants to roll over 1, 2, 3, 4 consecutive lower closes. One thing you want to look out for is that volume spike next week if we get some selling pressure. If we get a big red bar with a big sell bar for volume at the close of next week Friday on the IBM chart here on the weekly, that could possibly be signaling that we can start making our way down towards 155. These little long-term patterns down here, as this stock again has not been able to rally. And if you look at the weekly chart, this thing looks like it could be forming a bigger pattern here, a rounding top. I don't want to get too ahead of myself, but something to look out for. And they have earnings coming out back over here in January, so we'll see how that plays out. Priceline, another big heavy hitter in the tech space for these names, made an all-time high over here on November the 29th. Now it's been trading sideways, has not really been able to rally with the market. At the same time, hasn't been selling off with the market, so that's pretty interesting. So we'll see how Priceline trades next week. Again, not a big stock. Sorry, not a stock that I trade. It's pretty heavy price here, but definitely something to gauge if you're looking to see how these big, online internet sales type of stocks are trading. All right. What else do I see going on? Well, Sprint and T-Mobile. Sprint put in a bid for T-Mobile, or there's some rumors about Sprint putting in a bid for T-Mobile. So Sprint moved up higher last week on Friday, right at the close. So did T-Mobile with symbols TMUS. If Sprint was to acquire T-Mobile, that would leave the market with dominated by three big companies for the mobile space here. Mobile providers, I believe they are. So T-Mobile, keep an eye on this stock for Monday. It looks pretty good. Again, just something that I'm watching. Also, some more ideas here. Aside from just, I don't want to just look at some names. I want to give you guys some general ideas as well of a couple things to watch next week. ACAM had a big day on Friday. You can see it's been trading in this little range here from the big gap down that it had all the way from the 52 level. If ACAM could break above 46 on Monday or early next week on Tuesday, I will look for this thing to make a move back up towards 47, and then who knows, maybe this stock will try to get some gap fill action here. Gap fill action here from the big gap down it had from 52 to 46. You can see volumes down here at the bottom of the chart is starting to pick up a little bit. Keep an eye on the A cam. Um, let's see some more ideas I want to look at. GMCR. I always like to look at GMCR and HLF just to see if these crazy names are doing anything. And GMCR may be shaping up for a move higher next week. You can see it had some decent buying pressure last week. Looking at the monthly chart, nice little pullback there on the monthly. Triggered along already over last week, over last month's high, but really again hasn't had that big expansion bar. On the weekly chart, still shaping up pretty good. Nice consecutive higher week close. Still low volume, needs to pick up some volume. But a break and hold above 74 would be pretty good in the daily chart, which I just showed you guys. All right, some more stocks to look at the top side. The Dow, DOW, Dow Chemical has been trading pretty strong. Monthly chart, nice little breakout there. Next breakout level would be over here around 42.29, but nice breakout of their little range. They're back here around 34.70. It's been trading higher. On the weekly chart, big breakout over this range right here that it had between, say, 39 and 40 and some change. Big breakout. Look for a move over 42 next week in this Dow stock for some follow through in the daily chart here. You can see it's potentially giving us an A, B, C setup or a bull flag, shaping up for a move higher going into next year. Most likely, we'll see how this one shapes out. But I like the chart; looks pretty good. The financials. Let's go and take a look at that sector chart. Starting off with the XLF, and we'll take a look at a couple names. XLF on the daily, monthly chart, sitting right here at the 200-day moving average on the monthly, 22. This thing has come a long way. Was down here at $6 back in March of 2009. Now it's at 21. Taking a look at the weekly chart, nice little upward channel. Notice how momentum's kind of slowing down a bit right here, but I really wouldn't be too concerned about the XLF until we start breaking and holding below 21. Again, let me zoom in here real quick, and you can see how 21 was a breakout area, and we've been holding above that for the past 2 weeks now. This little momentum, not really momentum, but this little selling pressure we've been getting here. So if 21 holds and we consolidate, we could look for a move up. But if we break back below 21, look for a pull back down. And then the daily chart, again, showing us that this level right here, 21 some change here, is acting as support. A little short-term resistance trend line across the top here. A little downtrend, short-term resistance trend line. So you want to keep an eye on that trend line on the daily chart there on the XLF. And then, of course, you got your little lower levels down here to watch. 2060 will be the next level to watch, as that was the most recent pivot we had before. Well, actually, no, right here, 21. But if we break below 21, that would be the next pivot low to watch down there from 2060. You guys see that? All right. And then we have the 50-day moving average. So what stocks are trading well in the financials? Well, you have Goldman Sachs trading pretty good. All right, Goldman Sachs has been trading pretty good. You have Morgan Stanley, which we mentioned to you guys last week to watch. Morgan Stanley has been trading pretty well. Again, we told you all to watch this on Thursday as we close right on that 50% trend line. Friday had a nice little bounce. The market looks to go higher next week. The financials are strong. Look at Morgan Stanley. Let me see how JP Morgan closed. See what's going on here. JP Morgan not really doing much. And then JP Morgan holding 56. Then Bank of America. Bank of America pulling back to 15. If it pulls below 15, watch the 1480 area. One sector that I see moving as well is the dry bulk shipping stocks. I'm not sure if any news came out on this sector last week, but take a look at DSX, Diana Shipping. Broke out last week, heavy volume. I'm looking for this thing to have some follow through on Monday. I'm actually setting my alert right now in case this thing does break out. We'll be able to catch it in the room. Then you have NAT you can watch. All right, NAT pulling back down to this little support area down here around 780. Resistance from the top of the range around 9.25. Short-term resistance right here at 860. All right, and then you have what's this other one? NM. I believe this is Navius Maritime. But anyway, this stock just broke out of a bull flag here. Look for this thing to get some continuation. If it breaks over 950 or so, 951, and setting my alert, that should get some nice traction there. So some action in the dry bulk shipping space. If you're looking for uh, another sector showing some strength, take a look at the casinos. MGM, nice looking chart. I really like how the monthly chart looks on this thing here. It's been able to break and hold above 16. The weekly chart, nice little move up, pull back, got bought right up, and now it's closed right above this 21 level. Look for MGM to have some continuation next week. And then you want to look at Wynn Resorts, another strong gaming stock casino name. Looks pretty good on the daily, breaking out on the weekly, and making all-time highs on the monthly. Decent name, strong chart. LVS you could take a look at as well. And this one's shaping up there. And then CZR. Remember that gaming stock that came out with it was the IPO not too long ago here? Well, actually about a year ago or so. And looks like it wants to go back up. All right, little triple bottom action, a little support action being formed down here around 17. Short-term resistance around 21. All right, a little higher pivot base down here around 19. If this thing breaks over 21, get a nice little move up here as the sector is in place. So you may have some people looking around, looking for some names to buy, to get some alpha, and some names that have not rallied up with the MGM and the Win. So keep an eye on these casinos. Uh, Keep an eye on CCL next week. CCL had a nice little pop up on Friday. This will be a good idea. They have earnings coming out on Thursday. It looks like. Remember, this company's been in the news with all that shipping, with all the cruise uh, cruising action that's been going on. Remember, they had some problems in some media because some guy, they got into a crash or something earlier this year. Either way, these names have been in play. I really don't trade them on a day-to-day basis, but I like the chart how this thing's shaping up here. It's recovered from its gap down. It's trading sideways in this range. Could try to get a breakout going into the earnings. We'll see how that plays out. Just an idea, not the best idea, but keep it on your radar. EOG, I like this setup if you're looking for a energy name to get involved in. All right, EOG broke out on the monthly chart from this big upward channel, broke out right here. So of course the back test would be like around 150. Pulled back on the weekly chart to 38.2% Fibonacci from this little move up right here. It's right at 38.2% retracement. And then on the daily chart, it's a little bit extended from this little breakdown right here. You can see the momentum really hasn't been coming in, and it's been holding support right in front of this 155 area. So keep an eye on this ELG. If it decides to get a bounce next week or in the week to come, I like how this name could be shaping up for a dip buy down here. There's a lot. Again, I'm looking for some money to start rotating some of these energy names and basic material names. We'll see from there. But keep an eye on that name. If you're looking for some names to short, I would say retail is looking pretty weak right now. Target, all right, looking like it's ready to roll over and break below 62. All right, that's an ugly looking chart right there. You have Walmart's holding steady. It's been pulling back. I believe they announced a new CEO or something back around, like, say, 2 weeks ago. It's been pulling back here, but there is a key trend line to watch that I have on my chart for some reason. Let me go back to the daily chart, 2-year daily. I see where that key trend line comes from. So you take out these drawings. Either way, Walmart's been pulling back as well. However, it has some support right here around the 76 area. Also, it's at the 50-day moving average. But retail's looking weak. KSS, another weak looking retail name here. Watch it if it breaks below 54. JWN, another retail name that looks pretty weak. Watch it if it breaks below the 60 area. And then we're seeing some weakness in the OIH sector weakness, right? Halliburton, Rig, DO. These names have not been able to catch a rally, especially DO, which is the weakest of the group. NE. You have DO right here, though, looking pretty weak. I mean, look at the weekly chart rolling over, and then I'm sorry, it's monthly, but look, monthly chart rolling over back to the bottom of the range, around 55. You can see the stock's been hammering at this 55, 54 level for a while. So if it breaks below 54 on DO, guys, I'll be careful here. This thing looks like it's been hammering out there for a while. See the weekly chart just broke down. Volumes picking up down here as you can see. And then the daily chart making new 52-week lows. So DO weak stock. Halliburton's hanging in there. Rig is somewhat hanging in there. Halliburton again. We're going to be watching out for that 48 level, but that's something to look for. Adobe, big move last week. We're going to be watching this for the top side. Adobe, see if there's any continuation action there. Then you have Oracle for the Oracle showing some weakness in that space. They have earnings coming out next week. I would definitely keep an eye on Oracle. You have Altera showing some weakness for the semiconductor group. All right, looks like it's going to be a short if it breaks below the 52-week lows right here around 30.61. Keep an eye on that name. And then you have some momentum or some profit taking going on in these defensive names like KO, which looks like it's going to break down early next week. Keep an eye on that name. Pepsi, J&J, some of these little consumer names here, safe names, or defensive plays, you call it. They're looking pretty weak. Some money rotating out of those names as well. J&J. So that's about it, folks. The video's pretty long. Hope you guys enjoy it. I know some of you guys are not going to even watch all of it, but again, we'll be making some money in some of these ideas next week in our chat room, mywallstreettv.com. Have a great day, folks. Cheers.